Hey, what's going on? It's the Bearded Realtor back at you again in the video. Hey, so in today's video, we're going to talk about multifamily homes. Currently with interest rates pretty high, not as high as we've ever seen, but they're higher than normal and most people are used to, and it's causing a very slowdown in the market to where people don't want to buy. They don't know what the interest rate is now compared to what it's going to be later. So, but they know what it is now, but they don't know what it's going to be later. So, we're going to talk about a possible way for you to mitigate that interest rate and also make a little money at the same time. I got Mr. Cassandra Dawsonville from Dawsonville Group, and we're going to kind of give you some options of how you can get around that and some ways you can still buy a house and maybe not pay a mortgage or make some money at the same time. So stay tuned to the video. All right, so if you guys don't know who I am, I'm Maurice Murphy, realtor here in Jacksonville, Florida. I got my preferred lender, Mr. Cassandra Dawsonville, with me. And today we're going to talk about real estate as we always. Sometimes I talk about beers as well, okay? But in today's video, we're going to talk about multifamily homes and how those are possible ways for you to buy a house and then maybe make a little money or have a way of paying off your mortgage. So kind of give us a rough way of how someone could go about doing that.
So first, let me just kind of say, what is a multifamily?
Sure. Yeah.
A multifamily is a single family residence that is either 2 to 4 units, meaning that you have either 2 doors, you enter one and you have another 2 separate entrance, and up to 4. So that's considered your multifamily. Anything over 4 is considered commercial, but we'll stay with that. So a person can actually leverage buying a multifamily home, especially if they're going to live in it as a primary residence. So if you're going to purchase a multifamily and occupy it as your primary residence, you're only looking to put down, if you're going FHA, 3.5% versus your typical investment property, 10, 15, 20%. So multifamily, if you're purchasing it as a primary residence, it'll be easier, not really easier, but the best way to qualify is we identify what the rental payments would be for each of those units. So if you got, let's say, a 4-plex, and each unit goes for, I don't know, what, $1,000. So 4 doors, $3,000. Okay. Because we're not going to count the other door because you're going to be living in it. So that's essentially $3,000 that you're receiving for a 4-plex. Okay. And if that 4-plex mortgage payment, let's say, is $3,500, $3,600, well, Mr. and Mrs. Homeowner, you're paying about $600-700 for your mortgage. Because essentially your rental income that you have coming in for the other doors is helping pay your mortgage. So this is a great way to leverage being a homeowner and not having to wait until the rates go down, just so that you can have that ability to invest in property.
Gotcha. All right. So basically what I hear you saying is that a person can buy a house, live in 1 unit, rent out the other 3, and either make a profit or break even, and the other rentals will pay for their mortgage.
Absolutely.
Or just pay a very small portion of that mortgage if the rent's not enough to get them to where they need to be.
Right. I mean, especially if it's a buyer who is in a position to where they can, let's say they could sustain a $3,500 payment. Okay. And they're receiving that $3,000 a month. Well, you could either put more towards it, so that way you're paying down your balance sooner, or you can kind of save it and invest in other areas. There's so many different opportunities that you can leverage with purchasing a multifamily and having that extra income to pay for your mortgage. Got
you. And so we talked about it before, even with the VA loan, you can still take advantage of that same
You sure can. So if you're doing 100% financing with a VA, that's also another way for the veterans out there, service members, purchase a multifamily home, 100% financing. You can't beat that.
No, you really can't. I mean, you just pay your closing costs and that's it.
Absolutely. All
right. So multifamily, we talked about duplex, triplex, 4-plex. Anything else other than beyond that is to the commercial, right?
Correct.
Okay.
5 units or more, then you're kind of into the commercial space.
And then we talked about, so you got to have a house or a multifamily that has its own separate utilities. It can't be somewhere that Joe, the handyman, has split up the house and you have one person living at the top and somebody else living at the bottom. I mean,
that's not considered multifamily. No, it's like you just have an extra space where you can rent out.
Yes.
But that wouldn't allow you to consider potential rental income for that other space.
Got you. Got you. So here's a question for you. So I'm looking at an investment property, and it's currently a single family home. If we were to renovate it and turn it into a multifamily home, can we then sell it as long as we got the city permits?
Yep, I was just gonna say, as long as we have.
Like, I know the rules and regulations. I'm gonna get the zone and everything else. We can still sell that property as a multifamily.
You got it. Yes, if you can get it zoned, if it's zoned correctly and you have the permits, absolutely, you can turn around and resell it as a multifamily.
Okay, gotcha. All right. So that, I mean, there it is. I mean, you can easily do it. I mean, even certain houses that have an above the garage apartment, you could rezone it and have it as a multifamily, and have their own utilities or however you split it up. I mean, just whatever your city or state local requirements are. Yes. So I'll just look into that. I mean, a lot of opportunity out here with potential properties. Interest rates going up. A lot of buyers are still out here trying to find some great deals. So look into doing some things like that.
Yeah, I mean, and that's what we got to do in this market. You know, when the market changes, you have to be creative and think of different ways, because we don't want to sit back and keep paying somebody else's mortgage and not taking advantage of the opportunity when you can pay your own mortgage, pay your own self. So don't be afraid of the rates, because at the end of the day, you're not stuck to that rate for the life of your loan. You can always refinance to get a lower rate, and sky's the limit for you.
Gotcha. So question kind of off topic, but a little bit the same line. If you haven't already, check out that video we talked about with the DSCR loans. So let's kind of talk a little bit hard money to where you can refinance to that property. So let's say, for instance, you have found a multifamily that you want to live in. Right. You're going to buy it hard money. You're going to fix it up, and then you're going to refinance it into a possible traditional loan. Can you do that?
So hard money to purchase the property.
Hard money to purchase the property.
Fix it up.
Fix it up, and then you're basically going to buy the property in the traditional sense, or refinance in the traditional sense, to where you will live in one unit and you can still rent out the other 3 units.
Well,
how does that work?
Because hard money generally is only for investors.
Okay.
I haven't seen a hard money that's willing to do it for someone who's willing to occupy as a primary.
Okay.
So for an investor who would be looking to purchase it, fix it up, they can turn around and sell it to someone else as a multifamily, or refinance that property as a multifamily.
Okay.
Yeah, because hard money typically is for investors and not people who are looking to purchase a property for their primary residence.
And then they can still refinance into that DSCR type loan.
Yes.
Okay.
Yep.
But like I said, if you haven't checked out a DSCR video, go back and check that video out. All right.
Yes.
All right. Anything else with these multifamilies, and some creative ways to show people they can still buy a home and maybe make some money or even break even? I mean.
No, I mean, that's pretty much it. I mean, as far as qualifying, I mean, it's just like any other. The only difference is just that we're able to leverage the potential rental income for the other units. So that way, let's say if a person really can only afford a $1,200 mortgage payment, but they want to buy a multifamily, what you can receive for rent on the other units can actually help offset your mortgage, allowing you to get approved for a multifamily. So don't think that, oh my God, multifamily homes cost $400,000, $500,000. I don't make enough to afford that. Don't think about that. Let's, give me a call. We can talk about it to find out, okay, how much you can truly qualify for when we consider the potential rental income for each of those doors that you can rent out.
Gotcha. And does it matter if you buy a fourplex or a multifamily home that already has tenants in it? Does that?
It's even better.
Okay.
If you happen to find a property where There's tenants, like let's say if it's a triplex, if there's tenants in the 2 doors, but one is probably vacant, that's perfect, because then that person who's looking to purchase it as a primary residence can move into that vacant property.
Okay.
So that's even better, because at least that way you can show what that rental income is received.
Okay. All right. Well, you heard it here first.
Don't get discouraged. Just because you see a high price point for multifamily, don't think that you can't be an owner of it. So the only way to know is to give me a call.
Absolutely. So anything else about multifamilies and creative ways to still buy a property, make a little money, or not pay as much?
The only other, I wouldn't say to make money off of it, but another creative way is the 2-1 buy down. We kind of talked about that, but that's a great way just to kind of leverage being able to have a lower payment. Okay. I mean, we could even do that with purchasing a multifamily. Okay. You know, doing a 2-1 buy down, and we actually have some lenders that do a 3-1 buy down.
Okay. So for those who don't know, kind of explain what a 2-1 buy down is.
Yeah. So a 2-1 buy down basically allows the buyer to purchase a property at a discounted rate. So rewind. So your market rate, let's say 6.5% is a market rate for a home that you're looking to purchase. For the 2 years, you have a lower interest rate. So for the first year, your interest rate would be 4.5%. The second year, your interest rate would be 5.5%. And then after that second year, if you haven't already refinanced, then you'll be at that 6.5% interest rate.
Gotcha.
So this is just a way to have that ability to have a lesser payment while we're going through these times. And while we're waiting for the rates to drop back down, this is just a perfect opportunity to still leverage a lower payment with a interest rate, lesser interest rate.
Gotcha. All right. Well,
there's creative ways out here.
Creative ways to still buy property and not pay as much. So especially not a mortgage payment.
Yeah.
All right. So how can they reach out to you?
Yeah, if you want to reach out to me to ask me more questions, you can call me call or text at 904-903-1183.
All right, so guys know who I am. If you have anything else, put it in the comment section. If you're liking the content on this channel, give me a thumbs up and click that subscribe button, all right? So that's all I have, and we'll talk to you soon.